Entah, I pun tak tahu. It's okay lah. Just proceed je lah. Alright, you can
Okay.
have the floor.
Okay, Assalamualaikum. Assalamualaikum warahmatullahi wabarakatuh. So, our group represent base erosion and profit shifting, which is known as BEPS today. So, our member consists of 3 members, which include me, myself, Nufaika binti Muhammad Hisham, Shamiza Ahmad, and Nurain Akila. So I will start the presentation with the introductions of BEPS. Next slide. Next slide. Okay. So the introductions of BEPS. Base erosion and profit shifting is a tax avoidance strategy used by multinational company. Multinational company is a company which has facility and other asset in at least one country other than its home country. A multinational company generally has office or factory in different countries and centralized head office where they coordinate global management. So BEPS can be achieved through the use of transfer-based pricing, DTAA, which is Double Tax Avoidance Agreement, treaty shopping, and inflating invoice. Most of
Sorry, is that
pardon?
DTAA is different from DTA?
Yes, it's different.
Oh, okay.
Okay. So okay. Sekejap, eh. So, double taxation avoidance agreement is a treaty signed between two or more countries to help taxpayer avoid paying double tax on the same income. A DTAA become applicable in the case where an individual is a resident of one nation but earns income in another. So I will proceed to the history of BEPS. So how BEPS kenapa? I can't see the slide.
We can see also.
Okay. Okay. So OECD had started BEPS project in response to the 2008 financial crisis and formally launched in 2012 by G20 finance minister, who in turn called on OECD to develop an action plan to address BEPS issue. So in 2013 to 2016, they discussed about the action plan, the focus of the tax avoidance, and discuss about the financial report of the BEPS. And also in the 2016, there are 15 actions point to curb abusing tax avoidance by multinational company. In 2009, there are inclusive framework on BEPS was developed to see the progress report on the BEPS. Next. Next slide. Dah next ke? Tak nampak next pun.
Siapa yang jaga slide? Ain.
Ya doktor, tapi laptop saya macam ada problem.
Tak apa, tak apa.
Boleh ni.
Alright.
Okay. Sebelum reverse. Okay, tak apa. Okay, there. Okay. common practice identified, mostly multinational company uh, do excessive payment to foreign affiliated companies, aggressive transfer pricing, digital enterprise facing zero or no taxation in view of the principles of resident-based taxation, treaty shopping, incentive in the tax law for attracting investment, assets situated in a country but owned by companies located in the low jurisdictions with no substance. So usually multinational company do this practice to avoid the tax. Next. Ya Allah.
Okay, hold on, hold on.
Uh-uh.
Back to the earlier slide. When you
Uh-uh.
say that assets situated in a country but owned by companies located in local law with no substance, means that what does that mean?
I think lah doktor, I'm not sure. Dia ada asset in certain country. Lepas tu dia punya country tu dia macam nak cakap doktor, saya pun tak sure
Law
pun.
jurisdiction ke low jurisdiction ni?
Saya rasa low jurisdiction.
With no substance. Substance tu maksud dia apa pula?
Saya pun tak clear lah yang this point.
Okay, so what they do is that
Law
because we really have to
tax
understand these issues sebenarnya before you go into BEPS. What is the problem with this BEPS, right? So it means that those multinational companies, they have many, let's say that existence, alright, in several countries. So what they do is that in order, for example, in country A, country B, country C, for example, so what they do is that I think, I'm not sure. Also, I'm just trying to see how this, how this is actually come out there. So katakan country A is high tax punya country, right? So you have income in country A, and then country C is the lowest tax country. So what they do is that what they do is that because they tak nak bayar tax in the country, alright, actually income generated in that country, income is derived in country A, but they don't want to pay tax in country A because tax is very high. So what they do is that they transfer the money to country C so that then they still pay tax, right? Because this one I'm talking about avoidance. Dia bukan evasion now. Avoidance ni you still pay tax tapi you play around with the rules. Right, but sometimes of course it's very orang kata grey area between what is right and what is wrong, or whether it's legal or it's illegal, right? But if talking about evasion tu memang clearly lah you do things so that you don't have to pay tax, right? So what happen is that bila you shifting your income ni in order to avoid paying tax. Avoid ni could be that you try to minimize your tax liability, but sometimes it becomes why jadi issue. Of course lah, those country in A, of course they are not happy because these are the country that should collect tax on the revenue. But now this company, they transfer the income to other country because they don't want to pay high tax in the other country, in country A. So that's how I see that why those countries, alright, they are not happy lah with this. That's why they come up with the BEPS. Generally, I think that's the idea.
Betul tu doktor, saya pun fikir benda sama tapi saya tak tahu nak explain macam mana. Okay, so we continue to the next slide. So the aim of BEPS is to limit the risk of the tax avoidance by the multinational company, and the goal is to eliminate the double taxation as per OECD standards and stop the facilitating double non-transaction. So what they want to achieve is to reintroducing more fairness and more sense to the international tax system. Next. So how was the BEPS project developed? So the reason why, because the financial crisis in the UK, if I'm not mistaken, in the 2008. And the solution here, OECD proposed a comprehensively package of 15 action measure consists of three main blocks. The first is creating new rules to eliminate double non-taxation. Second is fixing existing rules of international taxation. And third is to increase the transparency. So the impact, they want to make sure that multinational companies will pay their tax where their activity are carried out and where the profit are made. Uh, like Doctor said, they make profit in the country A, but they transfer the profit to the country C to have a lower tax. OECD want to curb this aggressive of tax avoidance by the multinational company. So I will pass the presentation to the next presenter, Shamiza.
Okay, I will continue. Assalamualaikum and hi everyone. Do you hear me?
Dengar. Boleh, boleh.
Okay.
You ada
Okay, we
26
go to
slides
first
ni.
section. Huh?
Ada 26 slides Okay.
Okay. Okay, we go to action one, which is about tax challenges arising from digitalization. So the issue in this action is the digital economy is an economy based on digital technology. It refers to numerous online activities such as advertising, broadcasting and media, production monitoring, retailing and tracking, as well as financial service, remote education and healthcare diagnosis and records, also software and cloud computing. So, recently, rapid and expensive digital transformation had deep economic and societal impact, um, resulting in significant changes. So this has sparked global debates in many legal and regulatory realms, and international tax is no different. So at the center of the debate is whether international income tax rule developed more than a century ago remain fit for purpose in a modern global economy. So the fundamental issue of the global tax system which determine where tax should be paid, whether based on physical presence and what portion of profit should be taxed. So new technology have facilitated that tax avoidance through a shifting of profit by multinational company to low or no tax jurisdiction. So the solution for this action is that member of OECD have been dedicated to finding a comprehensive and consensus-based solution to the challenges arising from digitalization. Specifically, the inclusive framework has convened public consultation engaging key stakeholders including governments, businesses, civil society, academia, and a wider public welcoming a broad array of opinion on the matter to help us chart a path forward. Okay, to reinforce sustainability, the inclusive framework is also conducting economic analysis and impact assessment to ensure that any solution complement existing convention, securing the integrity of the global tax system. So the result is that the target, BEPS have made substantial gradual process. So far in this work include a program of work which is pillar one, the reallocation of taxing right, which include addressing the question of business present and activity without physical present will determine where tax should be paid and what basis will also determine what portion of profit could or should be taxed in the jurisdiction where the customer or user are located. So in pillar two is about global anti-base erosion mechanism. This include which will help to stop the shifting of profit to low or no tax jurisdiction facilitated by new technologies. Will This Pillar 2 also will ensure a minimum level of tax is paid by multinational enterprise and level the playing field between traditional and digital companies. Okay, next. Okay, in action number 2, is about neutralizing the effect of hybrid mismatch arrangement. So, hybrid mismatch arrangement involve the use of hybrid entity and hybrid instrument to provide multiple deduction for a single expense. Deduction in one country without taxation in another and multiple foreign tax credit for a single amount of foreign tax paid. Um, Hybrid entity generally involve cases in which entity is not seen as separate entity from one country perspective, but is from another country perspective. So hybrid instruments are financial arrangements that are treated as debt in one jurisdiction and equity in another jurisdiction. So the issue for this action is this type of hybrid mismatch arrangement was widespread and resulted in substantial erosion of the taxable base of the jurisdiction concerned. So this risk was highlighted in the context of international banking in 2010 OECD report addressing tax risk involving bank losses and a subsequent review by various OECD member countries. So the solution for this action is this action contains a number of additional detailed proposals for those domestic law changes such as denying dividend exemption when payments are deductible, preventing duplicate credit, altering CFC, which is Control Foreign Corporation Rule, to include hybrid entity income. And it also encouraging information reporting. It also contains changes to ensure hybrid instrument and entity are not used to obtain treaty benefit inappropriately. So the result is a number of inclusive framework countries range of hybrid and branch mismatch. The next. Okay, in action number 3 is about control foreign company. Control foreign company will respond to the risk that taxpayer can strike the tax base of their country of
What is
residence
CFC?
and
CFC tu apa?
control foreign company.
Okay.
Uh, Control of foreign company respond to the risk that taxpayer can strip the tax base of their country of residence by shifting income into a foreign company that is controlled by taxpayer. Which such rule CFC provide opportunity for profit shifting and long-term deferral of taxation. So the issue uh, is that um, since first CFC rule were enacted in 1962, an increasing number of jurisdictions had implemented the rules. However, existing CFC rules have often not kept pace with changes in the international business environment, and many of them have design features do not tackle base erosion and profit shifting risks effectively. So the solution for this action is that OECD Action 3 report set out recommendation in the form of building blocks for design of effective CFC rule, which include the definition of CFC, exemption and threshold approaches for determining the type of income subject to the rule, um, computation of CFC income, the attribution of CFC income to shareholder, and measures to eliminate the risk of double taxation. So these recommendations are not minimum standard, but are designed to ensure that jurisdictions who choose to implement them will have rules that effectively prevent taxpayers from inappropriately shifting income into foreign subsidiaries. The result is that um, the latest edition of Corporate Tax Statistics, published in 2020, collected information that on CFC for the first time. So the data highlight that a comprehensive and effective CFC has the effect of reducing the incentive to shift profit from market jurisdiction to low tax jurisdiction, and that carry out of 122 inclusive framework members survey, 49 have CF0 in operation in 2019 with different approaches to the type of income covered and the presence of substantial activity test. Next. Okay, we go to action number 4, which is about limitation on interest deduction. Uh, Action number 4 recommendation aims to limit erosion, to limit this erosion through the use of interest expense to achieve excessive interest deduction or to finance the production of exempt or deferred income. So, issue in this action is multinational groups may achieve favorable tax result by adjusting the amount of debt in a group entity. So, the use of third party or related party interest is perhaps one of the most simple of the profit shifting techniques available in international tax planning. The fluidity and fungibility of the money makes it relatively simple exercise to adjust the mix of debt and equity in control entity. Uh, for the solution is that the OECD report on limited base erosion involving interest deduction and other financial payment focus on the use of all types of debt giving rise to assessing interest expense or used to finance the production of exempt or deferred income. So in particular, this report establish rules that link an entity net interest deduction to its level or economic activity within the jurisdiction. The result for this action is as at mid 2019, a number of OECD and inclusive framework members have adopted interest limitation rule or are in the process aligning their domestic legislation with the recommendation of Action 4. Next. Okay, we go to action number 5, which is about harmful tax practices. Um, there are three issues in this action. The OECD Forum on Harmful Tax Practices has been conducting review of preferential regimes since creation in 1998 in order to determine if the regime could be harmful to the tax base of other jurisdictions. So the current work of Forum on Harmful Tax Practices comprise three key issues. The first one is about the assessment of preferential tax regimes to identify features of such regime that can facilitate base erosion and profit shifting, and therefore have potential to unfairly impact the tax base of other jurisdictions. The action specific content in 2018 progress report which include three annexes which output of BEPS Action 5 mandate for considering revision or additions to FFPF, which is Forum on Harmful Tax Practices framework. So monitoring data and grandfathered non-IP regimes and key reference documents. Okay, next issue is about the peer review and monitoring of action fund transparency framework to the compulsory spontaneous action of relevant information on taxpayer specific rules, which in the absence of such information exchange could give rise to BEPS concern. Uh, the action specific content is um, information gathering process. Number two, exchange of information. Number three, confidentiality of information received. And number four, do statistics. Okay, the next issue is the review of substantial activities requires to ensure a level playing field. Uh, The inclusive framework on BEPS has decided to resume the application of the substantial activities requirement for no or only nominal tax jurisdiction. Um, so originally, a criteria set out in harmful tax framework from 1998, it had not been applied to date. However, with the elevation of substantial activity requirements in preferential regimes um, and the broad-based membership of the inclusive framework working together on the equal footing, it was considered that the right time to ensure the equivalent substantial requirements apply in no or only nominal tax jurisdiction. Next. Okay,
Dah
we go
30
to
minit
action
tau.
number
You all
6.
kena shorten kan you all punya presentation.
Apa doktor?
Dah 30 minit ni. Baru 13 slide. Try to summarize a bit lah. Jangan too lengthy.
Okay. We go to action number 6, which is about treaty shopping through new treaty provision whose adoption form part of minimum standard that members of BEPS have agreed to
Faham
implement.
Syamiza?
So,
Syamiza, sekarang ni dah action 6 ya. Okay?
yes.
You just tell me, tell the class again. I wonder action 1, 2, 3, 4, 5, 6 ni. What are these?
This action, OECD have implement this action, do this 15 action to curb the tax
BEPS lah, issue.
tax.
So kita akan ada 15 lah ni.
15 action.
For you jangan baca cepat, jangan baca-baca sangat. Expedite sikit. But people will lose concentration bila you baca all these wordy things. Yeah, so you simplify kan setiap each of the slide. Hmm?
Okay. Action number 6 about prevention tax duty abuse, which the principle of reciprocity is therefore breached and balance the concession that the party make is altered. So it's also about inadequate taxation and the jurisdiction of the resident of the ultimate income beneficiary has less as incentive to enter into a tax agreement with the jurisdiction of sorter. So the solution for this action is the minimum standard on treaty shopping requires jurisdiction to include two components in the tax agreement, which is an express statement on non-taxation generally in a preamble. And one of three methods are addressed within shopping. And the result, large majority of inclusive framework members has begun to translate their commitment on treaty shopping into their action according to their according to their apa business. Next, action number 7 is about permanent establishment status. The issue is taxable present in jurisdiction under tax treaties may cause cross-border income to go untaxed or be taxed at low jurisdiction or at low rate. So enable jurisdiction to address BEPS concern resulting from tax treaties. The solution for this action is uh, OECD have changed to ensure that where the action that an intermediary exercise in a jurisdiction and changes to address situation where the exception applicable to construction site. So the result is that the changes to the permanent establishment definition were integrated in 2017 OECD Model Tax Convention and in the part of 5 of multinational uh, multinational Article 12 to 15.
Apa dia MLI
Next,
tu? Multinational
multilateral instrument.
multilateral instrument. Okay.
Hmm. Okay, next. Action 8 until 10 is about transfer pricing. Transfer pricing guidance to ensure that transfer pricing outcomes are better aligned with value creation of M&E groups. So the issue is in this regard, the works under 8 until 10 seeks to align transfer pricing outcome with the value creation of the M&E group. So in other words, the guidance provide under action 10, 8 until 10 provide to determine the transfer pricing outcome in accordance to the conduct of related party in the context of conceptual term of the transaction. Okay, the report contain about 3 key areas, which is action 8 about intangible. So intangible address action 8 address transfer pricing issue related to control transaction involving intangible since intangible is intangible are by definition mobile and they are often hard to value. Misallocation of the profit generated by variable intangible has heavily contributed to base erosion and profit shifting. So action 9 is about risk and capital. Work under action 9 consider the contractual allocation of risk and the resulting allocation of the profit to the risk which may not correspond to the activity actually carried out by the M&E group. So next is action 10 is high risk transaction. So action 10 focus on other high risk area including the scope of addressing profit allocation resulting the control transaction which are not commercially rational. The scope of targeting the use of transfer pricing method is in a way which result in diverting profit from the most economically important activity of M&E group. So that's all from me. I will pass to Ain.
Next, I will present Action 11, which is BEPS data analysis. Actually, Action 11 is when OECD found that BEPS contributes significant revenue losses. Action 11 actually they want to measure and monitor. Wait, doctor. Okay. Actually, Action 11 BEPS data analysis, BPS established methodologies which to collect and analyze data economic and fiscal effects of tax avoidance behavior. So, Actually, it is important for them because they want to inform the policy maker and taxpayer of the effectiveness of BEPS measure and extent to which BEPS issue continue exist. Next, for Action 12 is mandatory disclosure rule. Actually, Action 12 is provide recommendations for designs of
Mandatory,
rules.
mandatory tu betul ke ejaannya tu?
Mandatory.
MA kot.
MA.
No,
MA.
bukan. I say it's mandatory. Kalau I
Yes,
tak
yes.
pula ada new term lah pula bawah BEPS ni ada mandatory. Okay ah? MA ah? Alright.
Okay, MA. Actually, Action 12, they provide recommendation for design of rule to ensure to require taxpayer and advisor to disclose aggressive tax planning agreements because disclosure rules they will improve measure of disclosure which helps tax administration and tax policy to identify the emerging risk area and aggressive tax plannings. Next, for the Action 13, country by country reporting, which is BEPS provide a template for multinational enterprise, which called country by country reporting, which will provide relevant government needed information on their global allocations of income, economic activities, and tax paid among country. Country by country reporting also will help them to understand the risk poses to their jurisdictions and also provide greater tax certainty to multinational enterprise. Next is Action 14 is mutual agreement procedure, which they want to improve the resolution of tax-related dispute between jurisdictions. So what they do is they do a peer review process and reports mutual agreement procedure, which from the peer review process, they want to ensure the certainty and predictable to promote investment into their environments. And from this, they also has been increased number has scaled dealt with by competent authority and also increase the efficiency and improve the timeliness of resolutions of double tax dispute. Next, for the Action 15 multilateral instrument is they offer consultative solution for government to close loopholes in international tax treaty by transposing result from BEPS project into bilateral tax treaty worldwide. And the government agreed to implement a minimum standard to counter treaty abuse and improve dispute resolution mechanism. Actually, this Action 15 is designed to help implement to recommended measures to avoid tax treaty abuse. And for the conclusion, from this 50 action, actually OECD and G20 country agreed to implement four minimum standard, which action 5, 6, 13, 14, and 13 and 14. Next, as you can see here is a summary of Malaysian BEPS, which Malaysia also a membership in BEPF and Malaysia also apply a minimum requirement which is 4 actions, 5, 6, 13 and 14. They also have signed an in action 15 multilateral instrument. This is a reference and that's all from us. Thank you.
Alright, for the benefit of the class, can Aina, right? Can you summarize lah you punya topic ni because it's very heavy. Alright, but I think that the content mostly is on the action 1 to 15, right? The slide is actually on that 15. But okay, just summarize what actually your presentation is all about.
Okay, BEPS ni is about OECD. They use a strategy to they implement BEPS projects as a strategy to solve a tax avoidance, and they want to ensure that profit where economy activity generate and perform and where is the value created means which mean all multinational company they want to ensure they not avoid paying tax. They implement this project, and for this project, uh, to make sure all company apply to all action is not easy. So they agree to all multinational enterprise to implement with a minimum standard, which is for action in action 6.
The one that you
uh,
said now lah.
yeah, yes,
The minimum requirement tu, at least all company MSC must follow the minimum requirement. From
yes,
the 15, ada 4, right? Is it 4?
yes,
4 means all MSC must follow.
yes,
Yeah, minimum requirement lah. And then the others too, then it's up to them, but they encourage. So in other words, they come up with it because of the issue of tax avoidance, right? By the MNC, where they because of course some countries are not happy because income is derived in their country, but it's not actually paid tax in their country. So what they do is that, okay, we come up with this, so you have to fulfill this. But if you cannot apply everything, at least 4 of the actions you must do, and the others is better lah. For OECD, is good that company follow whatever actions recommended by them. Okay. Kelas faham tak? Okay. All right. Thank you. The other group, can we have one presentation because it's on, what is it again? It's on evaluate tax system kan? Boleh tak?
Yes.
Boleh, boleh, boleh.
Alright, jalan.
Jalan. Okay, let's go. Kita berjalan sekarang. Okay, our group, Assalamualaikum and salam, good afternoon everyone. So our group will present a topic about criteria to evaluate tax system. Don't worry, this topic is not that heavy. Just chill. Okay. So the first thing that we need to know is what is a good tax policy. There is a difference between tax policy and tax system, which tax system governs, but tax system regulates the tax policy. So what is a good tax policy? It is a framework of appropriate tax principles that is needed to analyze the proposal to change tax rules and the tax system in order to best ensure an effective tax system based on good tax policy. So from here we can see the relationship between the tax policy and the tax system, like I said just now. So how do we ensure a tax system is good enough? I want all of you to think about the tax system in Malaysia. So at the end of the presentation, we can, self-evaluate our tax system in Malaysia. Is it good or not? Okay, so based on our findings, the first principle of good tax system is it has equity and fairness. Similarly situated taxpayers should be taxed similarly. So in Malaysia, like the resident and non-resident case, they will be taxed differently. But the case of Malaysia residents, they will be taxed fairly. Fairly doesn't mean equally. Fairly means justly. Like in Malaysia, we use the scale rate for the resident and the flat rate for the non-resident. That's an example of fairness of tax system. So secondly is the convenience, the certainty. So the tax rule should clearly specify how much is the amount of payment and how it is determined and how to pay and that sort of things. So in Malaysia, we have that system governed by LHDN.
Why do you think that this certainty is important?
Okay, certainty is important to avoid misunderstanding and to make sure that everyone can plan their tax and know what is tax, what can be taxed and what is not taxed. Okay, so we have like income tax under that, so many sections that we have learned. That kind of certainty is needed in a tax system. So the third one is convenience of payment. So in Malaysia, I don't know how to pay tax, but I believe that the method is convenient to make sure the taxpayer won't get hustled just to pay the tax.
I
And
think that
also,
now because under e-filing, okay, because
mhm,
you are not yet taxpayer kan, but you should know by now, and in Malaysia we have e-filing, right? So it means that you just submit online and you also have to pay online. So if there is any balance of tax, then you just pay online via, of course you can go online banking, but you can also go to the counter lah. But I don't think now people go to bank counter to pay tax, right? And very unlikely individual go to Inland Revenue Board counter, right, to pay tax. So it's in terms of convenience, very convenient now because we have the online banking.
yes,
All right.
very convenient in Malaysia. So the fourth one is the effective tax administration. This is the cost to collect tax. It should be kept to minimum. So in this case, to pay tax, we just go through online banking. So the cost is basically zero. So it is effective. So to for the next criteria, I will pass to the next presenter.
Okay, so for the next criteria is information security. Information security refers to the tax administration must protect taxpayer information from all forms of unintended and improper disclosure, and that the structural features should keep pace with technological changes. For example, in terms of the online security, the Inland Revenue Board Malaysia will provide regular updates on the type of scams it is aware of, and they will continuously monitor system and customer records to guard against such fraudulent activity. The Inland Revenue Board Malaysia also encourage the taxpayers to report immediately to them if there is any suspicious activities. So for the next criteria is simplicity, whereby the tax rules should be clear and simple to understand to make it easier for individuals and businesses to understand their obligation and entitlement. So for neutrality, the tax treatment should seek to be neutral and equitable between all forms of business activities. In this case, the taxpayers that are in the same situations and carrying out similar transactions should be subject to the same tax treatment. For example, the Inland Revenue Board Malaysia adopts the neutrality criteria where both e-commerce and also the conventional business are subject to the same tax treatment. And for the economic growth and efficiency criteria, the system for taxation should be flexible and dynamic to ensure that they keep pace with technological and commercial development. For example, in 2019, it is reported that Malaysia has a low tax revenue collection that hinders the promotion of inclusive growth. So, the OECD suggested that Malaysia should raise tax revenue ratio to GDP by improving their efficiency of tax administration to promote economic efficiency of tax. So I will pass to the next presenter.
Okay, moving on. Can you hear me?
Yes.
Okay, moving on to the next point, transparency and visibility. Taxpayers should know that a tax exists and how and when it is imposed. So basically, we as a taxpayer, we should know the calculation at least. Let's say our income tax. So we have to know exactly, not exactly, at least the calculation. Even at the end of the year, we have to know the cost of transaction of the tax so that we can budget our tax. So besides that, before this, when we are using GST tax system, we also know that every level of businesses like supplier, wholesaler, they are imposed by 6%. So with that, we know that they are imposed by 6%. So minimum tax gap, structuring tax laws to minimize non-compliance is essential. So what is tax gap? Tax gap is a difference between tax that are owned and taxes that are voluntary paid. So basically, is the difference between tax paid and not yet paid. Yeah. So why is this happen? This is because of the complexity and the uncertainty of the tax system. So which people may get confused and which leads to some unintentional errors such as non-filing, under-reporting of income, overstating of deductions, math mistakes, and many more. So because of this, government have to impose some mandatory or penalties to control this non-compliance. So in order to encourage compliance, government in fact have to increase the level of enforcement to the taxpayer. So the second last, accountability to taxpayer. Accessibility and visibility of information of tax laws and their development, modification, and purpose are necessary for taxpayers. So this is actually main public awareness. So we as a Malaysian and taxpayer, we should know where does our money goes. So what do government spend with the tax we pay? So recently the government have released the budget 2021. So we should know in what sector does the government spend. So for example, the government spend approximate 10% for our COVID-19. So we should know about that. So basically, yeah, we should know about that. So the last part is appropriate government revenues. Tax system should have appropriate level of predictability, stability, and reliability to enable the government to determine the timing and amount of tax. So, as a government, we should have a flexibility and mixes of income tax because as a government, we need to spend more to generate GDP, right? So, because of that, we have to have a stable income revenue from tax. So let's say, for example, during the market crash, in fact, right now, maybe in COVID-19 market crash, so people have no jobs, right? So income tax revenue would be decreased, right? So because of that, government should not get their tax revenue from other taxes like, let's say, withholding tax and SST and many more. So due to that taxes, so the impact will be less severe. So next slide will be reference. So tax policy statement one, guiding principle of a good tax policy. Thank you.
Okay, so that's all from us. Any question from the audience?
Yeah, very good presentation. I like it. But all right, remember that class. All right, I like the kind of this topic. And there's so many things that I can ask you. All right, for example, your final exam. All right, because for example, can you go back to the earlier slide? I punya soalan
Yes,
macam ni je. No, janganlah first slide.
okay.
The second last slide. Contoh lah. Right? Macam you cakap pasal next one. Appropriate government revenues, right? Or minimum tax cap. So you really have to understand what a tax cap is, right? But of course, it's not fair lah to others because what you have here, minimum tax cap. So you really have to actually, just now you mentioned about the tax cap, what a tax cap is, right? So maybe what are the things that government can do to reduce tax cap? For example, you mentioned about enforcement, yeah. But not only that, remember that people want to comply ni. We talk about tax compliance ni ada dua. One is voluntarily or involuntarily, right? So if you comply involuntarily tu maybe because of the enforcement, right? Kalau you tak bayar, I akan penalize you, for example. But we are go more towards a voluntary, right? Government tak suruh you bayar tax pun you nak bayar tax, right? So what are the measures that can be taken in order to improve compliance, for example, yeah? And then in terms of the application of this, for example, talking about government revenue, all right, appropriate. So you know that, okay, government say that, okay, we have all this expenditure to meet. In order to meet all this expenditure, income comes from mainly from tax revenue, right? But with the COVID-19, all right, business is very slow, right? People are not working, so tak boleh nak collect income tax, right? Even business pun corporate tax is low. Petroleum pun drops, right? So many things that will affect the tax revenue for the government now, right? So that's why kalau you tengok sekarang government dapat duit pada mana? Alright, they have to go for their public dia panggil apa? Government link company lah. For example, Petronas. Alright, so this is the way that government has to get the money because alright, you know that okay tadi you mentioned about GDP, alright, in order to create that economic punya cycle tu, people must have some cash to spend, right? Then only you can create economy. So bila you tengok tax ni is all related to punya fiscal policy. So it's very interesting actually. Yeah, why government give a lot of incentive, right, to those affected by the COVID-19 or even those yang tak affected pun spend. Why? Because we need to generate the economy. Yeah, so it's all related. So this topic is actually for me is a very basic topic yang you kena faham so that you understand, alright, why we need to have this tax revenue to the government, right?
It's 1 o'clock.
Because we don't have our natural resources yang boleh that can help the government to self-sustain. For example, Brunei, they don't need to collect tax because they have enough natural resources, right, to support the country. But Malaysia not, right, because we don't have that capability. So that's why we have to collect tax. In order to collect tax, we have to create the economy, right? So everything is actually interrelated, right? I think that you have done your microeconomics, you have done your macroeconomics. So you nampak the importance of the tax too, yeah, is used as a fiscal policy that can help the government to generate income. Yeah. So good. Yeah. Actually another reference actually this topic because tadi you tunjuk mana reference you daripada mana? AIPA.
Yes,
AIPA punya downloadable document tax policy concept. Actually right, this reference good tax policy ni from Adam Smith. Ya, you kena mention Adam Smith. Kalau you tak mention Adam Smith, maknanya tak bagus lah sebab dia yang come up with the canon of taxation. Right, the good tax policy. Okay, so I think okay dah pukul 1, right? BEPS tadi, alright, presentation because the content is heavy tapi is this one also apply to every one of you ya? When you do presentation, number one, mesti you kena attract the audience attention, bring the issue. Alright, contohnya macam, for example this topic lah, alright, good tax. What are the things that, what are the factors that will make a tax system good for a country? Right? So why you need a good tax system? So you kena cerita sikit. Just macam BEPS tadi, you kena bring up the issue dulu. Problem dia apa pasal BEPS ni? Kan kalau I tak tanya, I rasa many of the students do not know pun BEPS ni apa. Why you come up with the BEPS? And then you have all these action 1, 2, 3 sampai 15. Right, remember that you are doing a presentation. Right, people may not be able to stay very long just to listen to your detail punya description. So you must make it very simple so that people nak catch the main je benda tu. For the reading, they have to do themselves. Right? You are not supposed to read for them during the presentation. Right? But you have to give them the very good foundation on that topic. Do you get me? So this not apply, not only for BEPS for all the presentation lah. Yeah. So I think that's all for today. We have a few more presentation. I think that we have berapa group lagi 1, 2, kita ada property development, promotion for export, agricultural sector, tourism sector, service sector. Alright. So I hope that maybe Wednesday and Sunday, hopefully by then finish lah all the presentation. Alright. And I just want to share with you that to date, alright, actually what we have covered, alright, until your midterm hari tu, mana punya soalannya? Salah. Kat mana? Okay. UTM final exam. Tadi I baru nak buat soalan final exam ni. You punya presentation ada about 20 topics. Alright. And then I also have topic on audit and investigation, tax planning for company, and also control transfer. Right. So because the topic is it's more on theoretical, it's more on the understanding, yeah. So your final exam most likely very minimal. I don't know where I can put the computation, but most likely you have to write down short essays. Yeah, you have to explain on the topics. All right, I can choose any of the topic that you have presented. I'm not sure, how is UTM? Are you going to have a modular, or how is the exam? Anyone? How is the structure of the exam?
Based on the last final exam, it is modular.
Section by section, is it?
Yes.
Itu namanya modular. Yeah. So you have modular because sometimes kita boleh bagi soalan normally lah, right? Bila advanced stats ni, soalan could be that I give you 5 questions, you only answer 4. Tapi because of the system modular, I cannot give you like that lah. Yeah, or I can do question 1, you under jawab A or B, something like that lah. Because we have many topics, right? Because I cannot test everything, right? So I'm not sure. I'm thinking of giving you some choice. You can choose some of the question that you want to answer, right? But of course lah, you cannot pilih A, yang mana yang suka je. I have to do, okay, question number 1, A is topic 1 to 3. Question B, topic 4, 5, 6, right? So you may not be able to answer all topic in 1 to 3, right? Or you may not be able to answer 4, 5, 6 semua. So of course you have to do some, you have to think lah which one will give you the highest marks lah, right? Which one topic that you are more comfortable with, yeah. I have to submit your final exam question by 31st of December. I rasa minggu ni baru nak start buat soalan ni kot. Yeah. Okay. Any question? Oh, sudah. Tak ada. You okay?
Doktor,
Ha.
nak tanya untuk yang projek ni.
Ya.
Saya tengok dalam guideline, kita orang kena submit 3 dokumen. First, PowerPoint. Second, PDF, magazine ataupun infografik. Yang ketiga, Word. So, Word tu...
Word tu ada?
Oh,
sebab
so,
kalau you buat artikel tu in words form lah. Tapi kalau you buat
so kalau dah buat infografik,
kalau soalan?
Kalau dah buat infografik, so Word tu tak payahlah.
Yalah. Sebenarnya Word tu sama dengan magazine tu, cuma kadang magazine you pakai different, you convert that into PDF ke apa kan?
Yeah.
So why I give you the option to do infographic, because sometimes infographic works better than reading the magazine, but magazine good for those yang good in writing lah. So I give you the option. Kalau you selesa, if you feel like doing magazine, do buat magazine. If you feel like doing infographic, do infographic. But infographic must be very catchy. Means that information must be there. Nampak je attract people to read, and it must be also informative. Right? It's not just that catchy tapi not information enough. Okay.
Alright, thank you, Doctor.
Alright. So I think that's all for today. Thank you for your attention. Thank you for your participation today. I hope that we have benefited from the presentation. We look forward for the balance of the presentation next class, inshallah. With that, I thank you again. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Doctor.
Thank you, Doctor.
Alright.